I basically cashed out in 2007, and I've been sitting in cash.
You did good.
And yes, I did.
All your money.
So I'm sitting on all this cash, and I'm watching what they're doing with the system, and they're pumping the economy with all this money. And I'm wondering whether or not buying physical gold and silver is the way to go. Except it seems like the market is manipulated.
Well, here's the thing. Okay, gold and silver, precious metals in general, are a fear trade. Right? People go in there when they're afraid. That is, if you take a look at the peak in 1980 that we had with gold, you will find that it corresponds with the time when the Iranians were holding a bunch of our guys over there as hostages. You'll also find that on the day that Ronald Reagan was elected and basically told the Iranians he was going to blow the hell out of them on Inauguration Day, that gold started to drop in price. All right, so it's fear, and not just monetary fear. It's also geopolitical fear. If you think there's going to be a big war, okay, you might think that your government's going to get blown up. So, holding a little gold might not be such a bad idea under those circumstances, right? The problem is that what a lot of people out there pushing right now is this concept of hyperinflation, and this goes back to the previous caller about reserve banking and where the leverage issue really lies. All right, we have a $30 trillion hole just in equities alone, just in global destruction of the value of stocks. Leave bonds out of it, leave commercial real estate out of it, leave residential real estate out of it. My best estimate is we've had about $5 to $6 trillion worth of wealth destruction in asset prices in houses in the United States alone. Then you have to look at commercial real estate, and when you add this all up, it's a huge, huge amount of money. Okay, it's probably at least equal to the global GDP for 1 year at this point. Okay, so this is the reality of what we are looking at in terms of the destruction of the spendable cash. And remember, credit and money are the same thing from a standpoint of you in the store. Okay, I can spend credit off my credit card just as fast as I can spend $100 bills out of my wallet. There's no difference from your perspective. If you can draw on your home equity line, you have spendable money just as if you are drawing $100 bills out of the vault. All right. Now the problem is that the hyperinflation fear is that we're going to make a mistake, that somehow all this cash that has been hoarded, that's sitting in the vault at the Federal Reserve and in people's mattresses, is going to come out and start to circulate at an extremely high rate and fuel another credit boom, and that's we're going to end up with a hyperinflationary Weimar Republic kind of situation as a result. My counterpoint to that is the Federal Reserve and all of the other banks have exactly one thing to sell, and that is money. They have nothing else to sell. That's all they've got. So if they make that mistake, they blow their own head off. Now, I'm not saying it can't happen, because it most certainly can, but I do not believe for 1 minute that you're going to see that happen on purpose. I believe that if it occurs, it's going to be an accident.